Hello, traders. Gary Wagner with the Gold Forecast here. It is Friday, finally, approximately 9:30 here in Honolulu, Hawaii, the 20th day of May, and this is the daily report for gold. We have a major rally going on currently in the gold market, currently trading up about $20 on the day, 15.14. As we watched it in trading activity last night, the interesting thing is it made a play for that elusive $1,500 ceiling. It exceeded it, traded to about 1503, 1504, came back down to 1495, 1496. And then, of course, we saw a tremendous rally this morning. I always find it interesting what news filters in and out of the market. When we're in a correction, of course, our economies are improving, and we seem to forget these primal factors that have been driving the market over the last couple of years. In this case, gold rises as Greece downgrades boost demand for a safe haven. This is from Bloomberg News. And they're saying that what we saw is in reaction to a rating change by Fitch where they cut Greece's credit rating. And the euro dollar, it tumbled by 1.2% against the dollar at this point. And of course, you can see what transpired in the gold market. Now, let's kind of pick up from where we left off yesterday. I was talking about the possibility. I really believed that we were going to get a standard ABC correction that would be flat, or what I call a pennant formation. We actually, when I look at this market now as it breaks out, and you can see it right here, we actually, in fact, got kind of a hybrid of both of them, and it is very, very interesting. There's no doubt, this is a classic, what we will call a pennant formation. You can see that the ranges tend to narrow, and you got that nice breakout today at the apex or the front of the triangle. However, when we look at straight Elliott wave, he believes that there's a total of 5 legs. So even if I count 1, 2, 3, this is leg 4 and it goes out. So my sentiment is really what we saw is a variation off of that, because the way that I look at it, it's a very, very compressed, what I would call a flat correction. And a flat correction is simply a point where you get your A and your B. On a standard correction, your C will go below it. That's a standard ABC correction. However, on what's called either a truncated or flat correction, you get something different. You get your A, your B, and then your C is either above this low, that's truncated. Flat would be to this low. And as you can see, the marketplace itself is so close in terms of the range itself that I'm going to just call it a hybrid. The reason I'm calling it a hybrid is you see that we had a real slow start as we then began to move into this last impulse wave, this wave 5. So that it is my belief that that additional time is really what maintained this, and in terms of classification, which I don't think is all of that important. We were looking for a correction. We got a correction. The key to what we were forecasting is whether or not it would be a standard correction, meaning the C wave having the lowest low of the cycle. Because by putting that out there, we had to define and get ourselves in early, and if we were incorrect, we had to weather a C, which could have been a very, very strong wave to the downside. Luckily, we were able to forecast this correctly. And again, this chart we started to work on yesterday. This is a longer daily chart, but you can see quite clearly that in terms of A, reaching an apex, we did, and B, in terms of a breakout, we absolutely got that. So I am actually quite pleased with the type of performance that we're seeing today in the gold market. Traders, this is a 612-minute candlestick chart, first in Henkin format, meaning an average chart, along with the moving average convergence divergence. I want to thank also Mr. Jackson for talking and sending me an email about settings that he found on the MACD that worked well for him. I have implemented them, which is 535.5, and you can see it does simply remove a lot of the lag in the market. It's quite clear when we look at this market from this vantage point, because when we take it down to the 600-minute cycle, in essence, we're breaking the day into about 3 candles, gives us a little bit more information. It allows me to see our wave count much more clear. Our A, our B, and our C seem very, very defined, and you can actually see the breakout as it goes to green on this shorter term intraday candle. And it happens if we look in terms of the date itself. You can see that the date itself was a few days ago. It's right in here. And then you can also see the MACD cross, and at the same time, we go green. And lastly, I kind of want to put it all together. This is our master chart with channel lines and Elliott wave. I have converted it down to a 528-minute chart in which we can look at a couple of very interesting observations. The first thing is, when we consider this pennant formation that I drew in yesterday, and I am simply looking at some major lows here and then our major low here. These are my 2 target points. I can move that up a little bit tighter. And then quite obviously our record top and then our series of highs here. These are our upside resistance target points. When we look at that, you have a utterly clear and utterly defined breakout to the upside. It's quite sizable. It's quite nice. We have been sitting in a position where we have been long at 1588 for quite some time. Traders, it does appear, and you know, I am quite superstitious about saying things like this until the trade is actually out and profits are taken, but it certainly at this point seems as though we absolutely, categorically, in a beautiful way, weathered the downside and positioned ourselves lovely, because as this market tracks back up, as I said, I believe that this last wave 5, which will probably be a complex 5 count, is going to propel us to new highs. I will begin to calculate those highs and get more realistic targets as soon as we have our first benchmark, which of course is wave 1. I will use wave 1 to run an analysis of where I think 2 is going to go, because I'm looking for a portion or a retracement of that. I will then use that wave 1 as a benchmark for corrective waves 4, but more importantly, impulse waves 3 and 5. And by putting together some simple math, we can come up with a pretty good upside target to where we think gold will trade at before moving into a corrective phase. A corrective phase will be more of an extended correction. We will then have to weather that. But most importantly, I don't believe that this bull cycle's over, because upon that completion, we'll start this cycle all over again. This has been Gary Wagner, wishing you as always good trading, and we'll talk to you on Sunday for another daily review. Bye-bye.
Many sights to see, and when I look in my window, so many different people to be, that it's strange